Hello, Professor. Today, my group and I are going to introduce the topic of stock indices. The members of the group are Alex Kong, Jimena Manjari, Carol Moore, and Juan Mendiure. First of all, what are the stock indices? Well, it refers to a statistical type record usually composed of a number, which deals with change in value or average return of the share that compose it. So we can say that is a measure of the stock market or a smaller subset of the market that help investors to contrast present price level with previous price, and that allows them to calculate market performance. Finally, the investor use the calculate values of the stock market indices as an indicator of the current value of their company stock and can determine long-term returns by comparing current and past index level. A clear example is the index called Nasdaq Composite, and the most important companies that are part of Nasdaq are Amazon, Adobe System, Cisco System, eBay, Hasbro, and Starbucks. About the history, the oldest American index in existence today is the Dow Jones Industrial Average, or simply known as the Dow Jones. This was created by Charles Henry Dow in conjunction with the Wall Street Journal to measure the economic and financial activity of the United States in the late 19th century. As a result, the stock indices were first used in the late 19th century. Due to that time, the most representative companies were those of railroads. To conclude with the history, today there are 100 of indices, for example, NASDAQ and Dow Jones. Therefore, when journalists talk about the stock rising or falling, they are relying on the stock index. This is because a stock indices is a very good economic indicator.
So how to make a stock index? Well, there are three ways. The first one is weighted price index. It is simply the arithmetic mean of the price of the securities that make up the index. The main advantage is that it is easy to calculate, but the main problem is the stocks with the highest price will have more influence on the value of the index, regardless of their real influence on the market. Well, there are two important indices that use um, this kind of method. That is Dow Jones Industrial Average and the Nikkei Dow Jones Average. The Nikkei are from Japan, and well, we know that Dow Jones are from is from United States. Then we have weighted capitalization index that it is built according to the market capitalization of each of the securities that make up the index. Well, this is the most faithfully represents the reality of the market of the measure, and most of the worst stocks use this kind of method, such as S&P 500 and IBEX 35. And finally, we have equally weighted indices that it is calculated the arithmetic mean on the of the profitability, and this is not a widely used method, but there are two examples of indices that use this method. That is the FT30 and the value line composite average. Then we have the world's most important index. First of all, we are going to talk about the Europe from Europe. First of all, we have the FTSE 100 from Britain that is called Financial Times Stock Exchange, and it is stock index operating in London Stock Exchange, and it like the most important companies that are in this index are Barclays, Diageo, Unilever. Then we have DAX 30 that is from Germany, and the most representative companies are BMW, Bayer, Siemens. Finally, then we have CAC 40 from France. and the most representative companies are L'Oreal, Peugeot, Alcatel, and is the most wide is the most widely used indicator from Paris stock market. And then we have IBEX 35 from Spain. That the most representative companies are Telefónica, Iberia, Banco Santander, and this index. It is made up of the 35 most liquid companies of the Spanish stock market interconnection system. Then we have from America. The majority of these indices are from United States. For example, Dow Jones, that is one of the oldest, best known as a widely used index in the world. And we have representative companies such as JP Morgan, Intel, AT&T. Then we have S&P 500 that also is from United States. And the most representative companies are Apple, Google, Facebook. And then we have NASDAQ 100, also from United States. And the most representative companies are Google, Yahoo, Microsoft, and it is considered a RACU index on Wall Street. And then finally, we have Bovespa from Brazil. And the most representative companies are America Latina Logística, Natura, Ambev. Finally, we have Asia, from Asia. The first one is Nikkei 225 from Japan. And the most representative companies are Sony, Bank of Yokohama. And then we have SSE Composite Index, then Hang Seng Index from Hong Kong. And finally, we have Kospi that is from South Korea. It has all the companies listed on this market, weighted according of their market capitalization. The most representative companies are Samsung Electronics, Hyundai Motors, LG Chem, and Naver. Then we have the classification. We classify in three different scenarios. First of all, we have, due to the geographical origin of its assets, we have three: national indices, international indices, and global indices. First of all, national indices are made up of assets from the same country. International indices are from different countries, foreign countries, and global indices are from around the world. Then we have by the type of companies. First, we have sector indices, and then intersectoral indices. And finally, we have by the type of the asset. First of all, we have equity indices that are made up of shares, fixed income indices that are made up of bonds and obligations of all kinds. And finally, we have indices of raw materials such as gold, silver, or oil.
Okay, so now that we know more about indices, how do we use them? Let's start with index investing. Index investing is a very simple and straightforward strategy that's very fitted for everybody. If one doesn't want to do any management or doesn't want to spend the time doing a lot of research, or just doesn't have an experience, it's just very good. So why index investing? As I said, it's very easy to manage. It's just one purchase of one thing. Is highly diversified. If you buy the S&P, for example, you get 500 companies, which is a very significant amount. It requires low amount of research, and especially good as a long-term buy and hold strategy. As well, it's very important that we have it shows historical results. Specifically, we can see how much it has performed by year, which is very useful to compare later on. And finally, we have a low commission cost. We're not really managing, we're just buying one thing. It's not multiple things. There's no rebalancing, no selling, no profit taking. You can see. So how do we do it? We can do this by purchase of each index component, which is not advice. You basically throw out all the advantages that I mentioned before. And what you should really do is just buy exchange traded fund or just deposit into an index fund. So another use that we can give it is an evaluation of performance. We can use it as a tool for comparison to compare our own investment performance or compare investment options. So here we have the annual returns for the SPY, which is the ETF for the S&P. And its 10-year performance is an average of 11.04. So if as an investor you're performing lower than that, you might consider just investing in the SPY, as it's a little bit more easier than managing a whole portfolio. As well, if you're considering multiple options of investment, you might want to consider the indexes as a cost of opportunity due to the relative ease of just investing into them. Another use we can give them is to measure economic performance. I personally not like this very much. It's not very accurate, but President Tom likes to mention this a lot. But here we can see in the graph, it's not very accurate here. We can see the coronavirus crash. And also lately, we can also see that the price is already near the highs. So how can this be when the US economy is not really recovered? It's So let's get into technical analysis. There's a lot to cover here. So we're just gonna cover what's most fundamentally sound, which is beta. Beta is a measure of the volatility or systematic risk of a security or portfolio compared to the market as a whole. So for us that we're looking at indexes, this basically means the price of an individual stock being influenced by the price movement of a market-wide index. Here we have an example. On the top is the SPY, and in the bottom is Netflix. Here we can see that in March, due to the coronavirus, the SPY lost around 29% of its value. And following this one, because of beta, Netflix also lost around 25% loss. How am I so sure that's just beta? It's because of the Netflix fundamentals. You can see that during the coronavirus crisis, the revenue of Netflix should have been relatively unaffected, as people are staying inside their homes during the curfews, actually benefiting Netflix. So as a confirmation of this, now Netflix is on new highs and outperforming the market. So how can beta help us in this situation? The beta helps us in this situation by avoiding us running away and taking the loss when there was no reason to actually remove the investment, because there was no explanation for the loss. It was just a general effect, just a general correlation. So here's how the Peruvian market is organized. We have market indexes, we have major sectors and subsectors. So in market indexes, we have general market indices. For example, the Peruvian Select that we already studied in class. We have major sectors here: consumer, financial, industrial, mining, and public services. And then the subsectors, we have electric utilities, we have juniors, which are mining companies, and then construction.
Well, my part is S&P PBL Peru Select Index, what it is. The S&P PBL Select Index is the new stock market indicator aimed at becoming the BBL premium. BBL is la Bolsa de Valores. Okay, it is also a capitalization index, but with greater liquidity requirements and the size of the free flow capitalization. So that part from being broad and representative is also invertible and easily replicable. Now I will explain how is calculate the stock market in Peru. First, we need to know the index universe. I'm sorry. The composition of the index is obtained from the PCMP in Peru General Index. The shares of Peruvian company trade in North America are eligible to be included in the S&P index if they have a greater liquidity than those trade in the local market. The North America region refers specifically to the New York Stock Exchange. This is not including this, but it's like a concept, yeah. Then I will explain the market. First, we need to do a market capitalization and what it is. The share must have a market capitalization adjusted to be minimum floating of 10 to 100 million at the relevant reference date. Then is liquidity. As for relevant reference date, the shares must have negotiate a median daily transaction volume of at least 250 miles pen. So in that period of the 3 months and the 6 previous months, okay. Then the trading days that is here, the share must have been traded for at least 80% of the total trading days during the 3 months and 6 months periods prior of the rebalancing reference date. The component of the index have been traded of minimum 7% of the trading days during the same time period of remain in the index. Then the next is listed on the stock exchange. That is, the index mainly use the universe of locally listed shares to value the addition of each company. Then is multiple share classes and junior. That is, each company represents only once in the index. For this purpose, the most liquid class is selected. According to the 3 month MBBT as the relevant reference date. For the class of share with the highest liquidity, the market capitalization adjusts to the floating capital. For that, the companies registered as junior are not eligible for the inclusion in the index. Okay, now I will explain the evolution of Peruvian index. I'm sorry, this is index. Comparison with index or in the region, like Chile, Colombia, and Mexico. In Peru, the Lima Stock Exchange BML represent a 5.26% reduction of its general index. Shares in the mining minor 7.85%, industrial are minor 2.90%, and customer minor 2.34%. Sectors were the most affected on Mondays, the nights. Increasing case, also this is news. Increasing case of the coronavirus around the world have generated the different economy sectors, mainly tourists, reduced expectation of the economic growth in 2020, generating downward pressure on the stock market. In Colombia, what is happening? In Colombia, the stock market closed with 10.53% drop in Colcap index due to the collapse of the country's main share. The collapse of Colcap generates that, having reached a decrease of 10%, the BMBC suspend negotiation for 30 minutes in accordance with the provision of Colombian regulation. Now we can see Mexico and Chile. Mexico, the decline of the Mexican stock exchange of 6.42% is the worst result since October 2008. Mexican experts consider that the decrease in the BMB is mainly due to the negative reaction of the market after OPEC members decide not to cut production. In Chile, the Chilean government, given the difficult situation that is taking place regarding copper, the dollar, and the stock market, will have announced a series of measures to protect current company and customer. Despite this advance, the Santiago Stock Exchange fell 4.58%, becoming the country with the smallest decrease in the stock market, in the stock index. Yes. Yeah, thank you.
We have some recommendations. The general recommendation regarding to the stock market in Peru, taking account Alberto Arispe, is that tax adjustment can be made which help motivate investors by preventing them from paying excessive taxes when investing in the stock market. On the other hand, it should take into account the fact of being able to motivate and incentivize investors to save in the stock market, which the state can intervene in the promulgation of this incentive. Considering that indices demonstrate good long-term performance, we can suggest as a great passive investment for those who are long for a low management and diversified investment portfolio. This can be used not only in Peru, but it's easy to invest in other countries by the simple purchase of deposit in a fund.
Well, finally, we have conclusions. The first that is that we can conclude by saying that index stocks act as a barometer that shows the general condition of the market for the investors. And it is important to mention that they help investors to identify the general pattern of the market, and also to identify like the exactly time to invest or to catch an opportunity. And investors take the stock market as a reference to decide which stock to invest. And then we have these indices help investors who don't know which individual stocks to invest in can use indexing as a method of choosing their equity investments. And that's it.
Thank you.